U.S. labor market grew at a slower than expected pace in June, and that's making economists optimistic that the Fed could succeed in lowering inflation without sending the economy into a recession.
Karen Caifa has the numbers and the details from Washington.
Lance and Amber, this report will likely come as a relief to the Federal Reserve, a job market that remains solid but slowing down, potentially leaving room for more interest rate hikes, but appearing far from a recession.
The U.S. jobs market starting summer with a cool down.
Not too hot, not too cold. I think it's exactly what the Federal Reserve would be looking for.
The Labor Department said Friday that U.S. employers added 209,000 jobs in June, a drop from May's hot pace of 306,000, and missing economists' expectations, but giving hope that the U.S. will dodge a recession amid the Federal Reserve's efforts to stem inflation.
The data, the Bureau of Labor Statistics data, I think are consistent with where the Fed wants to see the economy going.
The June numbers mark 30 consecutive months of job growth for the U.S. economy. The unemployment rate ticked down to 3.6%, the Biden administration touting another streak.
We've had 17 straight months of an unemployment rate that is under 4%. We haven't seen that since the 1960s.
Many economists think the U.S. is on track for a soft landing, with higher interest rates curbing inflation but not tipping the U.S. economy into a recession.
It definitely is starting to look more likely. Inflation is coming down quite meaningfully, and wage growth has been moderating steadily, and that suggests that inflation could keep coming down in the coming months.
After a pause on its aggressive rate hiking campaign in June, the Federal Reserve will make its next decision on interest rates on July 26th.
And sectors seeing slowdowns during the month of June, with little or no change in employment numbers, included retail, transportation and warehousing, and also manufacturing. In Washington, for 27 News, I'm Karen Caifa. Lance and Amber.